Warren Buffett has a net worth of over $130 billion. And his daily life makes absolutely no sense. He still lives in the same house he bought in 1958 for $31,500. He still pays exactly $3.17 for his McDonald's breakfast. He does not have a Bloomberg terminal. He does not obsessively check stock prices. And for months at a time, his daily schedule consists of sitting in a quiet room, reading, and doing nothing. How does a man who refuses to behave like an investor build one of the greatest fortunes in human history? Not through a secret formula, not through insider access, not through superior technology. He did it by mastering the one thing that destroys almost everyone else: human psychology. This is the Billionaire Blueprint, the story of how Warren Buffett wired his mind from childhood to make wealth not just possible, but inevitable. To understand the investor, you have to understand the boy. Warren Edward Buffett was born on August 30th, 1930, in Omaha, Nebraska. His father, Howard, was a stockbroker turned congressman. His mother, Layla, was fiercely intelligent and deeply unpredictable. From the very beginning, Warren was wired differently. At age 6, while other children were playing marbles, Warren was buying 6-packs of Coca-Cola for 25 cents and reselling individual bottles at a 20% profit margin. By 8, he had read every book about the stock market on his father's shelf. He read most of them twice. At 11, he bought his first stock, 3 shares of City's Service Preferred at $38. The stock dropped to $27. He held. It recovered to $40. He sold, and then watched it climb to $202. He learned the first great lesson of his life. Patience is not passive. Patience is a weapon. By 14, he was running 2 paper routes and had filed his first tax return, famously deducting $35 for the wear and tear on his bicycle. He had saved over $1,000. In today's money, that is more than $22,000. But the most formative chapter of Warren Buffett's psychology was not financial. It was his mother. Layla Buffett struggled with intense mood instability. Her verbal aggression was unpredictable and cutting. For a young boy still trying to understand the world, it was destabilizing. But rather than breaking, Warren adapted. He built what psychologists would call an impenetrable inner fortress. He learned, quietly, slowly, at a very young age, to completely separate his emotions from his external reality. He could not control his mother's behavior, but he could control his response to it. Decades later, when the global financial system was collapsing in 2008, when banks were failing, panic was contagious, and professional investors were selling everything they owned, Buffett was calm. He had been training for that moment since he was 7 years old. The most important investment you can make is in yourself. His anchor through childhood was his father. Howard Buffett modeled one thing above everything else: integrity. Do what is right, not what is popular, not what is profitable today, what is right. That principle, character as foundation, would become the invisible infrastructure of every business decision Buffett ever made. When Buffett arrived at Columbia Business School in 1950, he found the man who would define him. Benjamin Graham, the father of value investing, taught a radical idea. A stock is not a ticker symbol. It is a fractional ownership stake in a real business. You are not trading prices. You are buying pieces of companies. Buffett absorbed this and spent the next 7 decades building something extraordinary on top of it: a complete mental architecture for decision-making. The framework is this: know exactly what you understand well enough to explain to a 5-year-old, and aggressively avoid everything outside that boundary. Not occasionally, not mostly, always. Buffett passed on technology stocks for decades, not because he was afraid, because he was honest. He knew what he knew. He knew what he did not. That boundary, that circle, is where his edge lives. But even Warren Buffett broke his own rule, and it cost him. In the 1960s, Buffett was locked in a negotiation with the CEO of a failing textile company called Berkshire Hathaway. The CEO had verbally agreed to buy back Buffett's shares at $11.50. When the written offer arrived, it was for $11.37.50. 12.5 cents short of the promise. Buffett was so infuriated by this breach of trust that he bought a controlling stake in the entire company just to fire the CEO. He then spent years trying to save a dying textile business he had no expertise in an industry in structural decline, purely out of wounded pride. He later called it a $200 billion mistake. He kept the Berkshire Hathaway name for the rest of his career, not out of sentimentality, as a permanent reminder of what ego costs. Risk comes from not knowing what you're doing. From Graham, Buffett inherited a second mental model, Mr. Market. Imagine a business partner who shows up every day with a different price to buy or sell your shares. Sometimes rational, often hysterical. When Mr. Market is panicking, Buffett is buying. When Mr. Market is euphoric, Buffett is watching from a distance. During the dot-com bubble of the late 1990s, the financial media declared Buffett finished, out of touch, irrelevant. He refused to buy internet stocks. His reasoning was simple. I do not understand them. He was perfectly comfortable looking foolish in the short term to avoid ruin in the long term. When the bubble collapsed in 2000 and trillions of dollars evaporated, Berkshire's portfolio stood untouched. His partner, Charlie Munger, cemented the mental architecture with a concept borrowed from mathematics: inversion. Munger's version. Tell me where I'm going to die, so I'll never go there. They do not search for brilliant ways to make money. They systematically identify all the ways money can be destroyed, and they simply avoid those paths. The result is a framework that eliminates catastrophic error before it ever happens. If mental models are Buffett's architecture, emotional discipline is his foundation. Every financial market is, at its core, human emotion made visible. Every chart is a real-time record of collective fear and collective greed playing out in slow motion. Most investors are swept along by those tides. Buffett studied from childhood how to stand perfectly still. Be fearful when others are greedy, and greedy when others are fearful. This sentence is quoted in every investing book ever written. It is understood by almost no one. Because living this principle does not require intelligence. It requires you to feel calm when the world is screaming. In September 2008, as the global financial system was hemorrhaging and every institution on Wall Street was begging for survival, Buffett published an op-ed in the New York Times. Its title? Buy American. I Am. While the world was selling everything it owned, Buffett was methodically deploying capital. He had spent 80 years training his nervous system to respond to crisis with clarity, not panic. He calls it his inner scorecard. He does not measure himself against market benchmarks month to month. He does not care what financial media thinks of his decisions. He asks exactly one question. Is this decision rational, given what I know? This scorecard is the reason he has never been chased into a bad investment by public opinion. He built it through deliberate daily practice. He avoided financial media noise. He did not subscribe to the hysteria of Wall Street. He chose to stay in Omaha, the same house, same routines, as a conscious, engineered choice to protect his psychology from external contamination. The enemy of great decision-making is not ignorance. It is the illusion that constant action equals constant progress. The stock market is a device for transferring money from the impatient to the patient. So how do you actually install this psychology into your own life? You engineer it through daily rules that compound, exactly the way interest compounds capital. Rule 1. Define your circle ruthlessly. Write down what you understand well enough to explain to a 5-year-old. Not what you find interesting, not what your friend recommended, what you actually understand. Your edge lives exclusively inside that boundary. Outside it, no matter how compelling the story, is ego speaking. Rule 2. The 20-slot punch card. Buffett says to treat your investing life as if you only ever get 20 decisions total. Every move punches one hole. Once they are gone, you are done. This mental constraint forces you to ignore 90% of the noise and wait, sometimes for years, for the one opportunity that genuinely deserves your capital. Rule 3. Read voraciously. Decide rarely. 500 pages a day in his early career. 5 to 6 hours of reading every single day for the rest of his life. Not to gather more tips, but to deepen judgment, to sharpen the ability to separate signal from noise. His partner, Charlie Munger, describes Buffett as a learning machine. Wisdom is not a talent, it is a practice. Rule 4. Live below your ego, not just your means. The $3.17 McDonald's breakfast is not about saving money. It is an immunity to lifestyle inflation, the silent killer of long-term wealth. Every dollar not spent on performance is a dollar compounding. Wealth is not what you show. Wealth is what you protect. Rule 5. The newspaper test. To every leader at Berkshire Hathaway, Buffett offers one test. Would you be comfortable if your most important decision today appeared on the front page of your local newspaper, written by a journalist who fully understood your actions? This is not compliance. This is character architecture. A daily alignment check between your values and your behavior. Warren Buffett built one of the greatest investment records in human history. Not because he had information others didn't. Not because he had technology others couldn't access. Not because he was the smartest person in the room. He built it because he was the most rational. He built it through a psychology rooted in the willingness to think differently from the crowd. The discipline to sit still when the world is panicking. The humility to know the exact limits of his own knowledge. And a patience, extraordinary, radical, almost inhuman patience, to let compounding do its work. The Buffett blueprint has never been a secret. The books are public. The letters are public. The principles are public. It is just extraordinarily difficult to execute, because it asks you to do the one thing that human psychology resists most. Quiet your ego. Ignore the crowd. Wait. Where does your circle of competence end? And are you honest enough with yourself to stay inside it? If you want to master the mental models that run the world, subscribe to Billionaire Blueprint.